Hello everyone, Pigmoney here with the first video since E03 forcibly closed my account. For those of you who are following the channel, it will be no news that on February the 20th, my platform of choice for stock investments, E03, closed my account without any reason given whatsoever. No reason, no warning, no chance to appeal, they just force-closed my ongoing positions, so it is safe to say that I had a strong motivation to find another platform to invest in stocks. While the transition of the funds was underway, I used the idle days to make some market research and come up with a plan. How did the first half of February go and what these new plans are? Watch the video until the end to find out. The month of February was actually going quite well. When eToro shut me down, my P&L was over 70% in profit. I had roughly 2,500 invested and my balance was around 4,200. A lot of these stocks were rallying, which gave me a good opportunity to close some DCA positions higher up in the ladder and free up some capital while the best position buys were still going well in green. As I mentioned before, on February 20th, all my long positions got terminated. Lucky for me, it was at the high point of the stock market, so in fact many of my stocks were closed just before they took a massive correction the following days. Come to think of it, I might have just gotten a chance to reposition my funds at better entries, and it kind of feels good, so eToro...
Joke's on you, I'm into that shit!
My platform of choice now is Interactive Brokers. After some use, I can confidently say that they are way more professional and serious than the previous one. Everything is customizable, I can set up my trading terminal the way I want it. There is hardly any information that would not be obtainable and ready for analysis. At first, it might seem complicated and complex, but once you get the hang of it and realize all the benefits IBKR offers, you will have no doubt that this is truly some next level thing. So let's see what my strategy was when I repositioned myself with Interactive Brokers. Whenever I found that the current price at the end of February was lower than the closing price on February 20, I immediately repurchased the shares with an equal quantity. This provided me with some great discounts. For example, Coinbase dropped by 23%. Block is lower by 30%. I re-entered Western Digital at almost half the price. Supermicro is almost down by a third, and the list goes on. In those cases where the price went up compared to the closing price at February 20, I placed an order so that whenever the price retraces, it will automatically buy the same amount of shares at the value that it had been closed at previously. This way, it is guaranteed that I would only win on this transition and not lose anything. I have orders pending of Ubisoft, Alstom, Wizz Air, Wharton, Nestlé, and Bayer, typically European stocks that were appreciating in price, and I am yet to find a good entry. I have a budget of 4,200 and 1,400 of that is in free capital, ready for deployment. This might sound like a lot, but I think it's not a bad idea to be cautious and keep some gunpowder dry. I have been saying this for a while, but I'm reading mixed signals from the market. On one hand, the chart looks ripe for a major correction. We have been in a pretty much uninterrupted uptrend for more than 2 years now. Cycles in the pattern would suggest that this has to take a breather sooner than later. On the fundamental level, there is a lot of nervousness going on global political scene, yet the valuations seem to be ignorant of all the risks that would usually force the prices into a reality check. On the other hand, there is also a chance for global tensions to ease out quite soon. Obviously, it is difficult to tell if this is going to be the case or not. There is definitely a strong motivation for the US president to deliver on the promises he made in terms of the economy and also geopolitical issues that have been the center of attention during the last elections. The daily RSI is also bouncing back nicely from the low ranges, so for the short time, we seem to be on track to be going higher from here. How far can we go? Not sure, but for the time being, it seems like there is more steam in this boat. So for now, I am on the stance of wait and see while keeping my funds ready to purchase stocks which plummet due to some temporary uncertainty in the markets, but with an overall bright future. Alright guys, this was the summary for February. I wish I could have provided the usual stock pick analysis I did before, but all my attention was focused on the transition between the platforms. Hopefully by the end of March, I will be able to introduce some fantastic hidden gems that I find in the stock market. Let me know in the comment section if you have some good or bad experience with Interactive Brokers. I would love to see your opinions, or if you would like me to make a tutorial on the platform. Until next time, trade safe, Pigmoney out.